Hello and welcome to the channel. Welcome to TMP Group. My name is Tom. Today is January 25th, 2022. Sure glad you stopped in today. Make sure on your way in that you smash the like button. It'll help get this video out to more people. Hit subscribe if you're new, you want to hear more from us, and feel free to share this with friends and family. I've got a good one for you today. Just going to talk about the overall markets and what we see happening, where we see the markets going, and at what point do we feel that it's safe to release our insurance plays and start dollar cost averaging back into our high conviction stocks, because many of them are on sale right now and we want to make sure that we try to buy them at the best prices, but we know we'll never be able to time the market. Our hope is only to not buy in at the top of the market and to get in at a low price. Before I get started, I do need to tell you that this is videos for educational and informational purposes only. I'm not a financial advisor, a simple investor that is trying to build generational wealth and accumulate wealth, start a wealth chain to pass on to my children and my children's children. The TMP Group is formed of like-minded people that are interested in preserving capital and making money in the stock market. So let's just jump right into it. So if we look at the indices right now, and it's about 11 a.m. here in Arizona, it looks like the Dow is trading right around 34,136. It's down 0.65%. So where do we see the Dow going? How low do we see the Dow dropping? How low do we see all the major averages dropping? That's what I want to get into in this video. Because I do believe there's still more volatility. We know that today and tomorrow that the FOMC is having their conference to set policy, and it will work two ways. Either the policy will be hawkish, and that will drive the market down as far as the Fed's raising rates and easing on we already know they're going to ease on the easy money policy, or they'll be dovish and they'll realize that they need to still prop the market up. I believe that it will be the latter, the first one. I think that the Fed will come out strong, knowing that with the trillions of dollars that have been printed and spent in the past 2 years, that we need to recover. We need to rip the Band-Aid off, and we need to have a reset. And that's what we're seeing in the market right now. We're seeing a reset. And some of our stocks have crashed. They're down over 20%. That would be a crash, in my opinion. But let me give you some information, and then you take it for what it's worth, do your homework, and see if it fits with what you're doing. So what we're doing here is we're looking for key levels in each of the indices. So as I said, the Dow currently is around 34,136. It's down 0.65%. We believe personally that the Dow has more room to fall. It could fall down to the levels of 33.5 or even as low as 33,000 on what I would consider a worst case scenario. Back in June of 2021, the Dow was trading at 33,200, 290 to be exact. So it's still up from the June 2021 levels, 846 points. So I do believe that we can still see a free fall down to those 33.5 and 33,000 level when the Dow hits, or if the Dow hits between the 33.5 and the 33,000 level. I would consider that a very strong buy signal for the market to turn around and rebound. We see a lot of support at 33,000, between 33,000 and 33.5. Let's take a look at the NASDAQ. NASDAQ currently trading at 13,500. It's down 2.55% today. We know the tech stocks have been getting hit the hardest, and with rising interest rates, usually our high growth tech will get hit the hardest. Money becomes more expensive. So even though the NASDAQ has already dropped a significant amount, I think that there's still more room to fall. I think that we can see levels of 13,200 down to 13,000, or maybe even 1290. Or 12,900. Now, back in January, so a year ago, January 2021, the Dow traded at $13,070. So it currently stands up 430 points. Ripped 430 points away from it right now, and we're right around that 13,001 level. So I believe the buy range on the NASDAQ or NASDAQ stocks will be somewhere between 13,200 and 12,900. Taking a look at the S&P 500, 4,330, current trading down 1.74%. Again, it's about 11 o'clock here in Arizona, and I see the S&P with some room to drop still down to the 4,100 level. If not 3,950, that would be an ideal sweet spot or a buy range. In February 2021, the S&P average was trading at 3,811. So again, 1 year ago today, it went from 3811 back up to 4330, and I'll get to the good news at the end of this video. But we do still see room for about another 300 to 400 point drop in the S&P. And then finally, the Russell. A lot of my stocks do fall on the Russell and the NASDAQ. Russell trading currently at 1,981. It's down 2.5% right now. With a smaller indice size, I would see the drop here down to the 1890s to 1830s. So 1,890 to 1,830 or even 1,800 flat becomes a sweet spot. Taking a look as recently as November 2021, the Russell was trading at $1,819. So we are up 162 points on the Russell. Again, 162 compared to the 846 in the Dow. You have to look at the overall size and volume. So do your homework and do your math on that. What do we recommend, or what steps are we recommending to the private members of the TMP group? And there's really only about 3 steps. Number 1 is we want to use this time right now to follow the market, to keep an eye on our high conviction stocks, and accumulate as much cash as we can. I've said before that our portfolios are like a garden. We have our money trees that we planted that we're highly convicted in that will never tear out. Then we have other plants that we plant in there, some flowers we want to keep in for a while. Those are our growth stocks. But then weeds, and I've been guilty of buying weeds. It's time to pull the weeds and put the money into the high conviction stock. So if you cannot accumulate cash right now and you're having a hard time, take a look at your portfolio, see which of the stocks that you have that you do not feel the heavy or high conviction in, and pull some of that cash out and keep it for the sale that is going on with your high conviction stocks. It's good to have a diversified portfolio, but I don't want to be too diversified. I want to be heavy in the stocks that are going to bring me the generational wealth. So number 1, we want to accumulate cash. Step number 2 is we want to DCA or dollar cost average into our high conviction plays. And what we want to do is we want to take a look at the high conviction stocks we own, see where we bought them, and see where they're at right now. For example, if you bought a stock at $100 thinking it would, over the course of time, would go to 150 or 200, and now that stock is at 70, then again, my opinion and my opinion only, but I would like to buy that stock at 70 as much as I can and equal my position I have at 100 to bring my overall cost down to $85. So on the rebound, instead of looking at an increase from 100 to 200, I'm looking at a rebound of 85 to 200. And that's how dollar cost averaging works, is putting a little bit of money into a conviction play over time. You're buying at the highs and buying at the lows. It is next to impossible to time in the market. What we can control, it's next to impossible to time the market. What we can control is our time in the market. And then third and last but not least is we need to have discipline, and we need to change our philosophy or our mentality and take emotions out. Take a look at your stock. The price might be broken, but the stock isn't broken. The company is still in good standings. Is the company heavy in cash? Fundamentally, is the company strong? Is the leadership still strong? If the answer is yes to all that, then don't worry so much about the fear, the uncertainty, and the doubt. Stay convicted in your plays. All right, if I am dollar cost averaging $10,000 into a position, my recommendation would be do this. Go back and revisit the levels on the Dow, the NASDAQ, the S&P, and the Russell that I talked about. And keep an eye on getting to those levels. But you don't want to miss the rebound. So if I'm $10,000 into a position or into a stock, for example, Apple, I'm putting $2,500 into that today. And then I'm going to put $2,500 into that in February. Today's the 25th, so I might do it around February the 20th. And then March 20th and April 20th. And that's how I'll spend my $10,000 on Apple. I wouldn't put $10,000 into Apple right now today because we could see more of a drop. We don't know the outcome. We can assume that the rate hikes are priced in. We can assume that inflation, the Fed will do everything that it can do to curb the inflation, but inflation will go up. We can assume that the Russia-Ukraine conflict will be resolved. We can assume that the U.S.-China trade will be resolved. But all it takes is one thing. It takes a new strain of the COVID virus. It takes a black swan event to drop the market, so we want to keep some dry powder on the side and average in. And I would say, again, my opinion, I want to average in through the rest of Q1 and into Q2, because I believe that Q3 and Q4 will be massive bull runs, and I want to have my money working for me. It's always nice to have your money working for you when you go to sleep at night. Your money's working. When you wake up, it's been working all night. I would say to bet on yourself, make an investment in yourself, and bet on the economy, that we always bounce back. That's the good news, is that over the next 12 to 24 months, the Dow, the NASDAQ, the Russell, the S&P, they should all hit new all-time highs. And in a year from now, we can take a look at this video and look at the Dow at 34,136, and the Dow will be up from there. The NASDAQ up from 13.5, the S&P up from 4,300, and the Russell up from 1,900. We definitely want to be in on the rebound. We don't want to wait until it rebounds and then get in. That's FOMO. We don't want to have the fear of missing out. We want to be in and increase our positions any way that we can. Right now is a good time to buy, but buy accordingly to the DCA schedule that you put in place for yourself. Because many of these stocks are on sale, 20, 30% down. They're good companies. I wish you all the best. I do appreciate you dropping in today. Like I said, smash the thumbs up, hit subscribe, hit share. And if you are looking for platforms to trade rather than to invest, I do my investing through TD Ameritrade. I have a link to 2 platforms below that allow me to trade. We have had some insurance plays that have done very well for us in the SQQQ, the SARK, the SRTY, but we will be pulling those insurance plays very shortly, because we are anticipating news coming out Wednesday or Thursday, and we'll see where the market goes from there. And if we have to increase our insurance, I'll come back on and let you know that. But we like to trade in a separate account than we invest in. So I put a link down to Webull. I put a link down to Robinhood. They're very user-friendly. And then, of course, there are 2 links to one to Coinbase and one to Crypto.com. Firm believer that anywhere between 5 and 10% of your portfolio, if not more, should be in cryptocurrency. And we are always going to DCA into Bitcoin and DCA into Ethereum. Those are our 2 main holdings of the TMP group. Again, I hope you enjoyed the video. I hope you have a great afternoon, and I hope to see you on the next video.